Stocks could have a very hot summer if we can keep a couple things in the economy in check. The inflation readings in the form of the CPI just came out about 24 hours ago, and every single headline number was a beat by 0.1%. So all headline numbers came in lower by 0.1% than what was expected. On a month-over-month basis from April to May, we had a 0.0% increase in the CPI. On a year-over-year basis, comparing May last year to May this year, we have a 3.3% increase in the CPI. Those two numbers are against a 0.1% increase expected and a 3.4% increase expected, respectively. When we exclude food and energy prices, also known as the core CPI, that number came in at 3.4%. 3.5% was expected on a year-over-year basis. And that's just a 0.2% month-over-month increase when a 0.3% month-over-month increase was expected. So like I said, beats across the board. That could mean great things for the back half of the year, but it's only if a couple things in the economy stay in check. Why this can move stocks, and specifically smaller cap stocks, small cap stocks, mid cap stocks, could benefit from this in a massive way because economies of scale is not on their side as much. If you take some giant behemoth like Amazon is not going to be nearly as affected by these small price increases as a smaller business. The smaller the company, the larger impact it's going to have on their profitability as prices increase because economies of scale is not nearly as big at play in a smaller company. So that's why when this report came out, we saw the Russell start to move up pretty nicely, which is the small cap index. And I saw countless small cap stocks and even mid cap stocks soaring yesterday on this news. Almost all of them have given up some of the gains, but they're still higher than they were 2 days ago, suggesting that investor confidence around small caps and mid caps was absolutely boosted by this inflation reading. I'm excited to get into this one, but before we do, if you're new here, I'm Austin. I'm a co-owner of cloudbusinessweek.com. I'm also a stock market investor. If you're not subscribed to the channel, become one of those 4,200 or so people and drop a like on the video. Helps the channel out in a massive way. Okay, let's get into it. So the 0.0% increase is so important for a lot of reasons. One of those reasons is that we haven't seen a 0.0% increase in the CPI since July of 2022. We've been as high as 0.5 increases on a month-over-month basis, and then the last 4 months leading up to May, January we had a 0.3 increase, February we had a 0.4 increase, March we had another 0.4 increase, and then April we had a 0.3 increase, and then that leads us to May with a 0.0 increase. If this trend can stay, this could mean really good things because the Fed targets a 2% inflation rate on a year-over-year basis. So if you think about even just a 0.2% increase, that would get us pretty close to the Fed target if that's what we saw every single month, month over month for the next 12 months. Because annualized, that would be a 2.4% increase in the CPI. So if we get a few months like this, where we have the 0.0 or a few months of 0.1, you can still get a couple 0.2s in there and actually be below the Fed's target of 2%. The reason that matters is because the Fed is not going to lower rates. Those rates are restrictive. They're not going to lower those rates until we get at or near their target. So stocks are moving up not only because price increases are slowing, which helps out those smaller cap companies like we were talking about, but also lowering rates and becoming less restrictive overall is going to help the consumer and going to help spending increase, which also helps companies. And then the third leg of that is that servicing debt becomes cheaper for companies. As rates rise, if they have variable rate debt, that variable rate debt rises in its interest rate and the company has to pay more to service that debt. So if rates come down, any company that's holding debt on the balance sheet that's a variable interest rate debt, they're going to be able to see nice profitability increases because they're not going to have to spend nearly as much money on servicing that debt. So it's really those three main things that could really help stocks move higher. But there's one thing we got to check out inside of the CPI report that's a little bit troubling, and it might signal that we're not going to get another 0.0 month in June or July or August. So let's check it out. The main spot where prices actually came down on a month-over-month basis was in gasoline costs. The issue with that is it's probably not sustainable through the summertime. We normally see an uptick in gasoline prices in late March and early April, and then a leveling off, and then another rise after Memorial Day with prices peaking in July. Almost every single year, that's what happens with gasoline prices. So we've got a lot of things in here still increasing on a month-over-month basis. Food away from home increasing by 0.4. Medical care commodities increasing by 1.3. Shelter increasing by 0.4, medical care services increasing by 0.3, used cars and trucks increasing by 0.6, etc. You get the point. So it's not like all prices are coming down. It was really led by those gasoline prices coming down in a major way. So if we take out those price decreases of the gasoline and we actually have a price increase looking at the month of June and the month of July and potentially even the month of August, we might see 3 months in a row of hot month-over-month CPI numbers. Because if we take out this price decrease of 3.6% on gasoline in May, we would be well higher than 0.0 on the CPI. So we either need gasoline prices to have a very chill summer, or we need to see other areas start to come down. We need to see food at home start to come down. We need to see food away from home start to come down. We need to see medical services come down. We need to see used cars and trucks coming down in price in order to level out the probable rise in price of gasoline over the next 3 months. So if the next few months we can keep this 0.0 or somewhere around 0.1 or maximum 0.2, that could mean great things for the back half of the year with equities, with stocks. The more amount of months we get in the 0.0, 0.1, and 0.2 range, and the closer and closer we get to a year-over-year basis of a 2% increase, which is the Fed's target rate of inflation, the more the Fed is going to talk about interest rate cuts, which makes stocks rise and get some momentum behind them. And as long as we can keep that CPI on a month-over-month basis in check, that means good things looking out a year from now. As long as it stays consistent, we could see stocks start to move up massively. The only thing about that is that whenever the Fed does finally cut, typically the first rate cut actually causes a drop in stock prices. That is undoubtedly a fear-based drop because bringing rates down is less restrictive and it's better for business overall. So the fear-based drop of, is the Fed cutting because they stayed too long and they broke something, that's kind of imprinted into investors' minds, and that makes stocks sell off in the short term. Also, there's a little bit of buy the hype, sell the news with that as well. But over the long term, we know that these higher rates are not good for equities and they're not good for the economy over the long term. So let me know what you think of these CPI numbers and how equities are going to respond. Will we see a major rally in the Russell 2000 that we have absolutely been due for many years, or are we going to stay flat and stay chill on the Russell and have small caps and mid caps still floundering range bound? And all this stuff is fun to talk about, but just remember that nothing matters more than fundamentals of the stock that you're buying for a long-term investor. All of this other stuff is just short-term and medium-term news and where we might see stock prices, which can let us know when we might be able to get buying opportunities in stocks. Let me know your thoughts below. One of my favorite parts of posting here on YouTube is checking out your comments. Thank you so much for being here. Have an amazing day.